And welcome to The Bottom Line, where we break down the most pressing economic and business stories of the day. It's been an eventful couple of days within the financial world, and the impact can be felt all the way here in Poland. I'm glad to welcome back Ignacy Morawski, economist from Puls Biznesu, to help us get to the nitty-gritty details. Welcome back.
Hello.
So, the last couple of days, the world's eyes have been on the US, fearing a recession. Global markets are witnessing a massive sell-off of shares. What does this signify?
Well, there are three reasons for this sell-off. Fears of US recession, so the recession in the largest economy of the world, are one of the reasons. The second reason is increase in Japan interest rates. So Japanese currency was very often used in so-called carry trade transactions. So it was borrowed very cheaply and invested globally. So once the Japan Central Bank increased interest rates, it decreased the profitability of carry trade investments. And this seems to be a very big liquidity shock for the global markets. So this is the second reason. And the third reason for the sell-off are the fears that maybe the AI, artificial intelligence hype, is overdone. It's overhyped, maybe. The cycle or the investments or this technology is overhyped. So if you look at which companies are losing, you see that mainly technological stocks are falling. So I'm not really sure which of these three reasons that I mentioned, recession, interest rates, or AI hype, is the major factor behind the sell-off. But I suppose that the recession fears are not the most important. So when I look at indicators in the US, in Europe, in Poland, I do not see clearly signs of recession yet. So my view, obviously we are in a very uncertain moment. I don't know what will happen. But my view now is that we will not have a recession neither in US nor in the global economy. And Poland will be somehow safe.
That takes me to my next question, which is the SAM rule. Everybody is talking about this. If you could tell our viewers what this is and how it actually fits in with the assessment of the US economic situation and whether indeed the US is in a recession or perhaps on the verge of recession.
Well, the SAM rule is the rule coined by the US economist Claudia Sam. She used to work for the Federal Reserve, the Central Bank of the United States. Now she works in the private sector. And she observed that every time the unemployment rate increases more than half percentage point above the cyclical minimum, we have a recession in the United States following the signal. So now we are observing that US unemployment rate has been increasing for the last couple of months, and it has crossed the threshold set up by Claudia Sam. So a lot of economists are drawing a conclusion that maybe US economy is entering recession. However, we should remember that those kind of rules sometimes work, sometimes don't, right? The other famous rule is based on interest rates and the so-called interest rate curve. So the rule says that every time the curve inverts, so the interest rates at a longer term of the curve are lower than at the shorter term, the US enters recession. And what happened? This rule indicated recession 2 years ago, and the recession has not come. So those simple rules are useful, but they have limits. So we should certainly be aware that the risk of recession maybe has increased, but it's not certain. We cannot treat those rules as a certain thing.
Well, I interestingly enough saw an interview with her, and she spoke 2 days ago saying that there are a lot of factors that would suggest that the US is in a recession, but the factors that the US is in and is experiencing at the moment are abnormal, that there's still recovery from COVID,
yes.
There's been a surge of immigration in the US, yes. And that the US actually isn't in recession. The likelihood is very high, though.
Yes, well, the main problem with interpreting the unemployment rate is that the data, the statistical data on which the unemployment rate is calculated do not fully include the increased supply of labor, for example, from the side of increased immigration. So some economists say that the unemployment rate in US has increased not because of lower demand for labor, which would be recessionary, but because of increased supply of labor, right? So that would indicate that when supply of labor grows, it means that, okay, maybe we will have unemployment because there are more workers looking for jobs, and the unemployment rate might increase, but this is clearly not an indicator that the demand for labor, demand for workers is decreasing, right? So there is a debate among American economists and global economists also, because everyone is observing American economy, whether the unemployment rate is a meaningful recession indicator or not. Well, my judgment is that the risk has increased, but most indicators are still fairly good. Like today we had a PMI index, which is a survey index from the services sector in the United States. So services which are responsible for like 70% of GDP. And the indicator demonstrates that the economy is still in expansionary phase of the cycle. So, you have it's like a dashboard with green, yellow, and red lights. And we can see some lights flashing red, but it's not that, every light is red, right? You can see some red lights, but most of them are still green or yellow.
But we still see that there has been a significant sell-off, and so investors are looking for safer assets. So in principle, that is a good sign for the bonds markets.
Well, yes, there is the increased demand for bonds.
Especially here in Poland, so this is probably positive news for the Polish finance minister.
Well, I think the increased demand for bonds is obviously positive for the finance minister, but this represents a more general phenomenon, which is an increased expectation that central banks will cut interest rates. So everyone expects that Federal Reserve will cut interest rates within 1 month, and then maybe European Central Bank will cut faster. It already has started the easing cycle in June, and the expectations are that European Central Bank will cut rates, and then maybe Polish Central Bank, the National Bank of Poland, will also engage in easing cycle. So far, the representatives of Monetary Policy Council in Poland claim that they will not cut interest rates over the next couple of months or even a year or more. But when they observe what other central banks are doing, maybe they will change their mind. So the lower the interest rates, the better for every finance minister, also the Polish minister. And I also suppose that when central banks will start cutting rates, maybe the global economy will feel some tailwinds.
Before we move on to more regional matters, the likelihood of recession in the US is pretty high, at least that's what most commentators say. What would the impact on Poland be, especially that we now know that there's a bit of a deceleration in terms of the GDP forecasts for the country?
Well, that would prevent the economy from accelerating. I don't suppose that it will push us into recession, but I think it might prevent the economy from recovering from previous slowdown. Because we should remind that last year, when American economy was expanding pretty fast, Polish economy was stagnating. So we are in a different, I would say, point of the cycle. So obviously, Polish economy is very much export dependent. So over the last 10 to 15 years, exports growth has generated more than half of GDP growth. Not more than half of GDP, but more than half of GDP growth, right? So the most of Polish growth came from exports. And now, if we see recession in the global economy, the exports will decline. It has already declined over the last half a year. So it will probably continue the decline in such a scenario, which will then limit the corporate investments in Poland. And through this channel, it will, I would say, prolong stagnation. On the other hand, we have a clear and strong recovery in real incomes of Polish workers, right? So real wages are growing at a decent pace right now in Poland. And I suppose that the growth of consumption will be a very strong process which will prevent the economy from falling into some substantial decline. Right? So I suppose that rising consumption might be an important cushion, buffer, that will protect economy from the Polish economy from the recession. And by the way, I'm still positive on global economy. I still hope that those recession indicators, which are there, I admit, will not spread into some wider economic decline.
I think we'll only be able to fit in one question, and that's about the German economic forecast, which was originally positive at the beginning of this year, but now the economy is actually smaller than it was 2 years ago. Unemployment has increased as of last month. How does this impact Poland?
Well, Germany is a main Polish trading partner. So 30% of Polish exports go to Germany. So obviously the stagnation or recession in German economy means slower exports growth for Poland. That's a negative factor. In the past, sometimes Polish companies used moments when Germany was in decline to enter German market, right? Because German corporations, when they face recession, they look for cheaper suppliers. So quite often they came to Polish suppliers to cut costs, and therefore sometimes when Germany was in a bad, I would say, economic situation, Polish companies managed to use that and enter German supply chains. However, this time, I think the situation is different because we have much stronger currency, Polish exchange rate. So the cost competitiveness of Polish companies is lower than in the past, and I think it will be more difficult to use the recessionary mood in Germany to increase market shares in Germany. So my view is that German recession today is bad for Polish economy. It's one of the factors preventing faster acceleration after stagnation in Poland, right? As I said, consumption is growing here, domestic consumption. However, Polish economy is very much export dependent. So unless exports recovers, we will not have a true and strong recovery in Polish economy. So we are waiting for the Germany to grow again. Apparently, they have problems with real estate market, with housing market. High interest rates are pushing the activity in the housing market down. It decreases demand for durable goods, and Poland is an important producer of durable goods like home appliances, furniture, etc. So there is a very strong connection between high interest rates in Eurozone and low industrial production in Poland.
Okay. Thank you very much for joining us, Ignacy Morawski.
Thank you very much.
Pleasure speaking to you.
Thank you. Thank you.
That was Ignacy Morawski, economist at Puls Biznesu. For more business stories, check us out on X and on tvpworld.com. Thank you so much for joining us on Business Arena. I was your host, Marie Cato. Join us again tomorrow at 5 p.m. CET on TVP World, but don't go away. Coming up next, World Talks with Marcin Krzyżanowski, a Middle East expert at Jagiellonian University. Goodbye.